simply put, you have an institutional investor, the institutional investor that dictates trends in the world, putting money into a physical ETF as opposed to his own. Good morning, I'm Vince Lanci, and this is the Arcadia Economics Silver Fix. Good to see you all. And it's 8:49 my time. This will be airing at 1 p.m. today. We have a couple things to go over, and one of them I think is extremely important, more important than the report last week on silver by Bank of America. So why don't we get to that? Okay, today we're going to be going through, as you can see on the left, the news and research, quick recap of that, market recap. And then I want to get into the Blackrock purchase of PSLV. Came across the tape Friday, and I did a little work on it, so I want to share that with you. Get the facts and the truth out there right away. And it's all very good. And then we'll get into my delivery update, which is behind me, if you can see it. All right, so here we go. The news last week, there's news and there's interest picking up in silver over the last 2 weeks. Now, if you recall, 2 weeks ago, Freudian, right? Bank of America did a comprehensive report on silver. And we published that and did some analysis on that. And we did a broadcast last week on that. Now, this past week, 3 items came out. 2 I think are important. One is that the Shanghai Futures Exchange is now experiencing big drawdowns in physical silver out of their warehouse. So the depletion of physical supplies is no longer just COMEX and LBMA. It's now spreading to China. Reportedly, or rumored, depending on how you look at it, that silver is being used for solar. And I saw that on Thursday. And I said, okay, that makes sense. China's a big producer of solar panels. So there's your industrial demand. All right, so silver's down 8 cents this morning, gold's down 250. Last week's activity was bearish. I don't care what happened on Friday. We're talking about just trading now, right? What happened on Friday was a short covering and pile-in rally because of the debt crisis, debt ceiling crisis. Unless that materially turns bad, the markets are going to treat it like it's a done deal. So the buying in silver and gold on Friday will probably work its way out, unless, meaning there's going to be more selling coming in this week. Don't be surprised, unless there's some materially detrimental news about the debt ceiling negotiation. All right, so we're done with that. Let's move on to SRS Rocco. Quick background on him. He's been a precious metals aficionado for quite some time, especially as it relates to energy of production. He understands the commodity business very well, and he seems to express his ideas or opinions in miners or stocks. So he has a background as a fundamental analyst as well, and I appreciate that. He posted something on Twitter noting that Blackrock, as of March 31st, took a stake of 4.26% stake, a position value of 170.8 million in PSLV. And his comment at the bottom of that was, BlackRock takes a big stake in Sprott Silver, while BlackRock has held its own iShares SLV ETF in the past. The most were 5.4 million shares during the pandemic shutdown. It doesn't matter if BlackRock holds onto the PSLV. The institutional waterfall buying is coming. Now, I happen to agree with him on that. We'll get to that in a second. But why don't we start to go through the implications of that? And I'm sure he's going to write about it as well. But why don't we get started? Okay, starting off, in terms of the news, that's the gold fix. Last week, Bank of America wrote up on silver. Now, why is that significant this week? Because Newmont And other miners have been looking at consolidating in the gold space for months. How do we know that? Because Bank of America wrote on that a couple months ago. Bank of America puts out 3 or 4 reports on gold, and then you have mergers in gold, and you have interest in gold. Bank of America puts out a write-up on silver, and now you have BlackRock buying silver. So there's a demand for analysis in this area. Moving on. Let's go through the real implications here. What does the BlackRock SLV purchase mean? The bottom line is broader institutional acceptance, which leads to more investor interest, which leads to an increasing awareness of the advantages of physical over paper. That's the summary. The background. PSLV is not broadly held by institutions yet. Now, there's a reason for that. It's not as liquid as other assets. They can't get in and out as easy. Therefore, they're restricted by their bylaws in buying it because they could get hosed on the way out. It has no options attached to it. Now, there are several implications of that, but the one that we're going to focus on here is that if there's no options attached to it, then there's no way to cover your shorts. And think about it, it's a physical asset. If you create options, you create derivatives. If you create derivatives, then you create claims on silver that you don't have. So there's no options on it. It has a decent sized short float, and that's from SRS. He noticed that. And I don't know what decent is. He knows the industry probably better than I do. But let's just say that it is decent. What are the immediate implications of this merger? Or not merger. Well, it's basically a merger. PSLV may begin to command a larger premium to SLV due to the above factors. Now, what does that mean? Well, simply put, you have an institutional investor, the institutional investor that dictates trends in the world, putting money into a physical ETF as opposed to his own. That speaks volumes about the asset class. They're putting, no matter how you look at it, how you slice it, they're putting money into a physical asset as opposed to their own asset. What else does it mean? It means PSLV. Now, by the way, I'm not recommending you buy this. I'm not an advisor. I mean, I can advise, but I'm not here. You have to make your own decisions. PSLV's beta as a silver proxy will increase performing like a leveraged miner, meaning you should expect the premium between PSLV and SLV to go up if this is the real deal. BlackRock, what is BlackRock doing? They're most likely buying a call on their SLV portfolio. A kicker. They're not going to take all their money out of SLV and put it into PSLV. We'll get into the whole tinfoil hat stuff in a minute. But what they're doing is they're buying an option on physical silver. That's what they're looking at it like. They're saying, okay, we own this much SLV. Let's buy a little bit of this in case. Now, there are other reasons you would do that tactically, especially if you think there's going to be new product out or new reports coming out. And we think BlackRock is aware of that. Implications for SLV. It is not the end of the world for SLV. SLV is going to go up too because of all this. If you think SLV is going to go out of business, then you think JP Morgan's going to go out of business. So that's not going to happen. I will tell you this, though, the spread between SLV and PSLV should widen significantly. Not tomorrow, but it should widen over a broad period of time. Why is institutional awareness so important? Well, broader institutional awareness will now create permission to own it. So broader institutional interest will now be permitted to be had. So BlackRock's doing it. Can we do it? It's that simple. BlackRock's doing it. Can we do it? It puts PSLV on everyone's radar, which puts the difference between PSLV and SLV on everyone's radar, which puts physical on everyone's radar, which, by the way, there's a news item, and Shanghai is pulling silver out for solar panels, right? There's no coincidences here. Okay, the sine curve model. Now, this is a favorite of mine on the academic side. What does it mean? Okay, we're going to go through in one curve the life cycle of an ETF, PSLV, silver, your life, anything, right? This is the most important letter in the alphabet. S for silver, S for sine curve, S for the cycles of life. Now, down at the lower end of the curve, that's when the ETF went public. Boom. There's not a lot of institutional awareness. There's not a lot of interest, but it goes up because people are investing, right? Okay. Then in here, you have what's called broader adoption. Broader adoption. Oh, this is kind of cool. And someone with some talent discovers it, and then they buy it. And what happens is awareness snowballs up. And awareness snowballs up. And this is not about the commodity. It's about PSLV. With the commodity going nowhere, okay, the price goes up because institutional awareness is increasing. Institutional awareness creates more, it's a snowball, right? And more people buy it, and you end up with this. And then at this point, you have a mature market that the institutions hold the max that they can hold. This happens in every stock. This is your IPO. This is your broad adoption. This is your maturity. ETF. So I want you to look at PSLV as here, this little spot right here, which is about to be broadly adopted institutionally. The price of it will go up because there will be more buyers. And because they have to source physical silver, that will be a direct demand on physical silver. You're actually going to have the tail wag the dog in the proper way here. PSLV will go up because of investing. The investing demand goes up into PSLV, which forces Sprott to buy silver, which forces the commodity to go up. You will see this ETF affect spot price. It's actually quite interesting. All right, so we can get into that, but the point is you're at the beginning of a ramp, unless Blackrock sells it tomorrow, but that's not going to happen. All right, so back to this. So there's your sine curve. What are the longer term implications? Okay, this is, I think, where we all live, right? If physical silver shortage awareness hits the mainstream, you could see the PSLV premium be similar to the premium of coins over spot. And what does that mean? If BlackRock is buying PSLV and other institutions buy PSLV, then what they're doing is they're buying an ETF in their minds, right? But what they're really doing is they're backdoor buying physical silver, which means Sprott has to go out buying physical silver, which means silver goes up. It becomes more scarce. Now, I want you to pretend in this instance, Sprott is you. You want to buy silver coins. Silver coins are trading spot. You buy them. If enough people buy silver coins, spot becomes lower than the price of the coin. The premium goes up, right? So Sprott right now is going out and buying coins. Every time he gets someone buy a PSLV share, he has to go out and buy some coins. Well, his coins are 1,000-ounce bars, like the one behind me. And the premium for 1,000-ounce bars is anywhere from 50 cents to $2 over, depending on who you talk to, as opposed to coins, which are $5 to $15 over, depending on who you talk to. Sprott is now like you. Sprott is now like us. Someone buys PSLV, that's an order for coins. He's got to go out and buy the coins. He's got to go out and buy the metal. So the premium he's going to pay is going to go up over the spot market. He's going to pay a premium, and that premium will start to come into the PSLV. So I want PSLV, it gives me physical exposure. PSLV goes $1 above SLV. Sprott has to go out and source more silver. It goes $1 over spot. See what happens? And so now you have this cycle that self-reinforces. You have market structure, and I love this shit. You have market structure reinforcing buying of silver. Okay. This increases along with institutional awareness. Pensions can buy it. States can buy it. International adoption of precious metals goes. Awareness grows. We all may think that everyone that we know knows about silver. We are so small in the investment community. So small. The world doesn't care about silver outside of Asia and outside of our little pocket of the world, but they're going to. All right. Price appreciation will be commensurate with its rarity and industrial use. I think I just said that in different ways. The more this buy PSLV, buy bars, silver goes up happens, the more you'll see silver reflect its rarity in the earth. So you would probably see the silver gold ratio shrink over time, long term, not tomorrow. Hot takes. This is the stuff that I think everybody wants to hear about. All right, guys, adults are entering the room, okay? Not coin salesmen, not FOMO spoofers, adults. Now, adults play their games too, but these adults don't enter the room unless they see something big going on. So what's BlackRock doing? BlackRock's entering the room because they see increased interest on the investor side as potential, right? They see green energy taking off. They don't care about our libertarian monetary ways. They just want to make money, the money that they think is money. What they do is they buy based on woke. We're now going to start benefiting from the woke crowd. This is solar, number two. This is solar and net zero energy based. BlackRock is woke, and I'll show you that right now. I'll show you that right now. How do I know this isn't about them saying it's the end of the dollar? Here's why. March 2nd, 2023. This is the BlackRock Metals Fund Manager in their annual report. The energy transition will require enormous scale of investment by mining companies over the coming decades. Decades, not talking about years. Mining companies are in an excellent financial position. That's pretty good to hear. With high levels of free cash flow, we all know that, and solid balance sheets. And that's because they were idiots 20 years ago. Now they know how to run a company. And these factors combined with the above potential tailwinds, green energy, could be a major factor in how 2023 shapes up for the sector. Against this backdrop, our investment manager remains cautiously optimistic for the mining sector. The board is also confident that the company remains well-placed to benefit from the transition to net zero carbon emissions, which will continue to create investment opportunities. Now, if that's not enough, I want you to look at this. February 3rd, before that announcement, BlackRock increased its position in ERO. BlackRock has filed a 13G form with the SEC disclosing ownership of 5.34 million shares of ERO Copper Corp. This represents 5.8% of the company. Same idea. They're buying metal that's related to the energy transition. It's happening. It's like a Ron Paul meme. It's happening. Okay. Awareness is spreading of silver as a green metal. So it goes up if the dollar defaults, and it goes up if we go into an energy transition. It's just going to happen that way. All right. The paranoid types, are they going to buy PSLV to cannibalize it? Whatever they're talking about. No, they're not. Not doing that. These are adults. They're not. Everything doesn't have to be a conspiracy for you to make money. Okay. They're not cannibalizing one ETF for another. If they did that, if they wanted to liquidate PSLV tomorrow, it would be 10 million ounces or less, probably like 8 million. It's not worth their time, and it would ruin their reputation. Okay. Number 4, and this is the hottest of hot takes, but I think there's going to be new products coming along soon. I'm not sure, but when you have banks write up reports, and when you have players take positions in ETFs they don't normally take, they're positioning, they're buying calls on new products coming out. Now, are new products bad? No, new products are accompanied by the investor interest that increases. So keep that in mind. It's all very good. So the bottom line here is you're right. You're right. And the world's going to start figuring out that you're right very soon. BlackRock buys. Other institutions will buy. They will cause the PSLV premium over SLV to get more volatile. I'm going to start watching that. That's my barometer. If the PSLV premium starts to get bigger, then I know other institutions are putting money in. If other institutions are putting money in, then I know they're not putting it in for a day trade. If they're putting it in for 6 months, a year, then Sprott has to go and source more silver, which means you're going to see silver have a floor under it. You'll see it have a ceiling that rises as well, but you'll see it have a floor under it. And with regards to the brick behind me, that's on top of the black box. Okay, I'm going to open that next week. I'm going to open it this week and take some pictures of it. It's too much to do because of this Sprott interest. Believe me, guys, this is major shit that's going on right now. This is the world slowly awakening. Even if BlackRock doesn't buy one more share, all institutional funds, they're all sheep, right? They all copy each other, right? They're going to start looking at this. How can I get exposure to that? Because BlackRock's a gorilla, right? Or an elephant in the room, however you look at it. If BlackRock buys and you want to remain in the room, you want to keep your client base, you got to say, well, I have some exposure to that too. So you're going to start seeing more and more of this. Anyway, keep your eye on copper. As I said last week, keep your eye on copper. We'll be keeping our eye on bank reports on copper to come out. We're going to be keeping our eye on, obviously, for more silver reports. And we're going to start watching the PSLV, SLV premium spread. I'm Vince. That's it. Have a great day and happy trading. Keep stacking. We're all going to be fine.